Credit explains the concept in a simple way by breaking it down into its basic components and explaining how it works. Understanding credit. When you borrow money from a lender, such as a bank, in exchange for paying back that loan plus interest over time. Types of credit. There are different types of credit, including revolving credit. Each type has its own terms and conditions. Revolving credit. In revolving credit, you have a set limit within which you can spend money without having to repay the entire amount at once. Installment credit. Installment credit involves fixed payments over time for a specific period, such as monthly installments on loans like car or mortgage. Payments must be made according to terms agreed upon with lender. Interest rates and fees. The cost of borrowing is reflected in interest rates and fees. Understanding these can help you manage your credit responsibly. Positive credit history. By paying bills on time and managing credit carefully, you build a positive credit history which makes it easier to secure loans or credit in the future. Negative credit impact. Neglecting to pay back debt as agreed upon with lenders can negatively impact your credit score. Building good credit habits. Taking advantage of free credit monitoring services can help individuals keep track of their credit reports and take steps to improve them if necessary. Using credit wisely. Knowing how to use credit responsibly is crucial in building a strong financial foundation that supports long-term goals such as saving for retirement or purchasing major items like homes. This is educational, not financial advice.